Quantum computing is gaining serious momentum. In this video, we'll dive into two major players in this space, IonQ and Rigetti. Both companies are moving beyond pure R&D and now boast substantial cash reserves, giving them the runway to chase real-world applications. As mentioned in an earlier video, quantum could become the backbone to AI's future, acting as kind of a broadband that unlocks its next leap. So this is a major space worth watching closely. I'm George Geis, and this is AI Venture Watch. All right, well, we have brought out IonQ. We've discussed this company in an earlier video, so let's now bring out Rigetti. All right, so I've got IonQ and I've got Rigetti. Let's quickly review IonQ. Remember, this is a leading quantum computing company pioneering in trapped ion technology, as we've discussed in a previous video. A little more on Rigetti. Now, Rigetti is based in Berkeley, and it is a full-stack quantum computing company since its founding in 2013. It specializes in designing and fabricating superconducting quantum processors. Now, let me just make a quick mention on that. Let me bring out and expand the node that it belongs to, built from superconducting circuits that operate at cryogenic temperatures. We won't necessarily go deeper into the physics of this, but that's a quick background. So Rigetti's playing in this space, and it operates and delivers its technology through QCS, or Quantum Cloud Services, a scalable platform that integrates with a host of different type of environments. And it's serving commercial, governmental organizations, providing hardware, software expertise. Again, this full stack idea that stands behind Rigetti. Let me select both of these companies and expand their events. A set of events related to each of these companies is specific events I'd like to discuss are going back to their IPOs. So here is the IPO for IonQ, and you can see it became the first publicly traded pure quantum computing company after completing its special purpose acquisition or SPAC. Now, a few details on the IPO. Its ticker is IonQ, not surprisingly. Its initial SPAC price was $10. That's a common initial SPAC price. Its first day close was $9.20, so nothing extraordinary. In fact, down a little bit on its first day of actual trading. Because if we go over to Rigetti and look at its IPO, we'll see it occurred about 5 months later, March of 2022, and it also was a SPAC after combining with Supernova Partners Acquisition Company, and then began trading on NASDAQ. So a little bit of details on its first day. It went public. Its initial SPAC price was $10 again. So both of these companies had a slight down day when they first came out, but how things have changed now as we go forward. Now, I'd like to bring out a couple other important items for each of these companies. So let me select both of them. And I want to bring out recent reports. And you'll see what comes back are their 10Qs, their most recent 10Qs. So let's examine these in some detail because there's some interesting stuff here that occurs. So here's the 10Q for IonQ, dated 8/6/2025, and some high level information. Its filing date, as we mentioned, was August 6th of 2025. Its price before the following was $42.02. So you can see that it's been up from its initial public offering price, but it also, as we'll see, has had a spike since this 10Q was released. Its price after 5 days was up to 43. But the market was up, so it had an alpha return from day 0 to day 5 after the filing of the 10Q of minus 1.2%. An alpha return, remember, is a market-adjusted return. So even though the IonQ was up, the market was up higher. Now, a little bit on its valuation. Its revenue was $20.7 million for the quarter. Its growth rate, over 200%. Now, that can be calculated different ways. I believe this is calculated as a semi-annual growth rate that's annualized. It has a substantial cash position of $546.9. And actually, as we'll see, after the 10Q, it had an additional raise, so that's even higher after this date. But its runway in months was 30.5. Now, let me talk a little about runway, because for both of these companies, this is a really important metric. I brought up a slide here, which basically describes what a runway is, a cash burn and a months to burn out. And months to burn out has to do with the runway. So months to burn out, a runway, is how much longer a company can survive without a cash infusion. Now, the cash burn rate is the cash used for operations by the company plus the cash used for CapEx, or capital expenditures, divided by the number of months covered by the cash flow statement. I'll illustrate this in just a minute, so don't worry if you're a little confused. The months to burn out is the cash plus cash equivalents plus short-term marketable securities, in other words, short liquidity, divided by the cash burn rate. So in the example of IonQ, we had, and based upon its 10Qs and dated 6/30/2025, as mentioned, it's even raised some more cash after this date, so its runway is even longer at this point in time. So the cash burn rate was 52.6. That's its cash used in operations. And we add to that its capital expenditures for the quarter. That is $1.2 million. Divide by 3, because the 3-month statement covers, again, 3 months. So it's burning 17.9 in cash per month. Now, it has $140.1 million in cash, and in marketable securities, this is cash and cash equivalents, and marketable securities 406.8, which means if I divide that by its burn rate of 17.9, it's got 30.5 months of runway. That's an important metric to consider for each of these companies, how much freedom they have going forward, given their current burn rate. Now, this can change dramatically if their burn rate dramatically goes up, or if they have additional cash infusion. So this is a point estimate, and this, again, point is 6/30/2025. Going back to our scene, so let's look at the report a little bit more detail. And this is, again, the 10Q report. So what I've done is looked at a change in the MDA. Now, the MDA is a management discussion and analysis section of the 10Q, which is really important to understand. And I've asked, an AI chat to analyze the difference between the 10Q that was currently released on 8/6, that covered the second quarter, with the previous 10Q, which was covering the first quarter. So let's see what the analysis comes back from the change in these 10Qs. It says the change is very positive, a 5 on a scale of 1 to 5, driven by aggressive expansion aimed at leadership in the capital-intensive quantum industry. And it talks about its revenue increasing for the quarter It also talks about major acquisitions, including LightSync and others. We talked about these acquisitions in a previous video. And remember that IonQ is in a pretty aggressive acquisition strategy. Refer to the previous video if you want to learn more. But its costs are going up, administrative costs, and its losses are widening. It also mentions the resolution of a major securities class action suit, which is positive now that it's closed. And then it says, most critically, the post-quarter equity offering secured additional almost $1 billion in additional liquidity. Now that is not covered in the runway calculation that we earlier looked at because this was post-quarter. And this gives it the fuel for R&D expenditures or future acquisitions. Now, one other thing I want to look at, so this, remember, is the analysis that's given on the change between one 10Q and another on the management discussion and analysis section. I want to look also at the media coverage that took place after the 5 days, during the 5-day period after the announcement of the 10Q results. This is an interesting, this 5-day period, I can discuss that in more detail in another video, but that's an important, interesting time to watch what happens to the stock after this 10Q comes out. In this case, the chat gives it a 4 out of 5, which is positive, reflecting operational progress relative to the nascent quantum computing industry. It said it posted a wider loss, as we've seen, $177.5 million, based on the continued investment in R&D, but as mentioned earlier, the revenue metrics were strong for the quarter at $20.7 million, higher than guidance, which is always a positive happening. Most encouraging, management boosted its full-year revenue outlook, now projecting roughly 112% growth year over year in revenue. And it talked also about this equity raise that occurred in July, increasing the pro forma cash to $1.6 billion. Again, dealing with this runway expansion that we've already discussed. And upbeat analysts' reports, the financial stability and growth trajectory also attracted institutional support, talking about New Jersey's public pension, which added to its IonQ position. So that's IonQ, its 10Q report. I want to go over and contrast Rigetti's. So let's look at Rigetti's. Again, high level. It filed its 10Q a few days later on August 12th. Its price before the filing was $15.98, and its price at 5 days after the filing was $16.63, and it had a positive alpha return of 3.32% over that 5-day period. Its valuation, its revenue was 1.8. Now, you see, it's considerably less revenue. Its growth rate was negative. Remember, this is very fluctuates a lot. It was negative 37.3%. There's some specifics that can impact that on a quarterly or even semi-annual basis. But its cash and cash equivalents, 425.7, runway in months, 58.5. So consequently, it has substantial runway, as we've seen before. Yeah, and a few more statistics here. Its analyst rating on day 5 was 1.17. So it's a positive analyst rating. Remember, 1 is a buy and 5 is a sell. These tend to be skewed towards the buy side. So the mean is, for overall for all stocks, is almost always less than 3. But this is a pretty positive analyst rating on Rigetti. Now let's look at Rigetti a little more detail as far as some of the qualitative information we've talked about before. Here's the MD&A change analysis. Remember, this compares the management discussion and analysis from one 10Q to the next. And it also gives it a very positive rating of 5, dramatically improved its liquidity, including a $350 million at-the-market offering and a $35 million private placement from Quantum. Now, we'll talk about Quantum in just a minute because this is an important partner for Rigetti. Financial success secured funds necessary to support future operating and investment obligations. So there is a lot of liquidity in this company, as we've seen, and its runway is substantial. It also announced technology milestone announcing a 99.5% median 2-qubit gate fidelity on its modular 36-qubit system. So there is fidelity measurements from a technology point of view, which is also considered quite positive in moving its roadmap forward. Now, its regulatory status is going to change because, again, it has more common stock float. It's going to become a large accelerated filer starting at the end of this year, which means it will have increased compliance costs. That's not necessarily positive. All right, so let's look at the media coverage during those 5 days. When I say media coverage, by the way, I'm talking about major media. What I usually do is analyze major media sources like the New York Times, the Wall Street Journal, the Financial Times, major publications like this to kind of summarize what the major media is saying about these companies. So Rigetti is characterized as an attractive, on a 4 out of 5, a positive analysis. Its strong fundamental outlook, despite volatile quarterly financials. We've seen the volatility in the revenue. It missed its Q2 revenue estimate and reporting a widened net loss due to there was a non-cash loss related to warrants, which may be a one-time event or at least an unusual event. But these risks are mitigated by robust liquidity, as we've seen, and also the fact that it is making technological progress. Substantial fuel for ongoing R&D, and operationally, the press also talks about this 99.5% median 2-gate fidelity milestone, and remains on track to release a larger qubit system by year end. So strategic execution and financial security again led to a major public pension fund to initiate a position during Q2. And some analysts are raising their target price while maintaining a buy rating. And finally, it says it signals confidence despite long-term potential, despite inherent lumpiness of the quantum industry. All right, so that's very intriguing background on both of these companies with respect to their 10Qs. But let me look at just a few more things before we wrap up this video. The stock spike. Notice this is an event common to both of them. Let's look at this as to what happened after the release of the 10Qs. This is dated 9/26/2025, about when I'm doing this video. Since their Q2 2025 10Q reports, quantum stocks such as Rigetti, now priced at $31.18, and IonQ 67.28 as of the close on, I believe, September 26, have surged. So these stock prices have surged despite some volatility. They have gone up substantially since the release of the 10Q over the last month plus of time. Investor enthusiasm has spiked, but volatility remains due to high persistent net losses and speculative valuations, making quantum computing stocks both promising and precarious. Nice summary is the way to put it. One other thing I want to show you before we're completing this is Rigetti, and I want to bring out its investment, corporate venture capital or venture investment from another company that's part of a deal. And this is Quanta. If you don't know Quanta, Quanta is headquartered in Taiwan, and it's a manufacturer, cloud computing solutions company. It is actively exploring quantum computing technologies, investing in research collaborations in quantum. So it is a serious player to watch from the manufacturing and cloud computing solutions perspective in the quantum space. Let's look at the relationship with Rigetti. Now, on April 30th, 2025, Rigetti secured a $35 million post-IPO funding from Quanta. Investment was part of a broader strategic collaboration with Quanta that was done in February 2025 when the two companies, Quanta and Rigetti, entered into a strategic collaboration to accelerate the development and commercialization of superconducting quantum computing. Partnership leverages Rigetti's modular quantum architecture and Quanta's manufacturing expertise. So this is an important partnership for Rigetti. We've seen IonQ, again, in a previous video, how actively it's been in acquisitions. Rigetti is not so much so far with respect to acquisition activity, but these partnerships that are developing are very, very important. All right. Well, as of late September 2025, here's the landscape for IonQ and Rigetti. Both publicly traded quantum ventures are demonstrating product momentum and maintain healthy cash reserves that can be used to fuel continued R&D or potential acquisitions. Confidence in quantum's future is growing, but the road ahead will still be marked by risk and volatility.